4 consecutive weeks of consolidation and 4 straight doji candles on the weekly chart. Is Nifty dropping hints of a massive silent accumulation, or are the moving averages setting up firm ceiling for the bulls? Let's dive deeper into what's happening. Hello everyone, I'm Kunal Shah, AVP Alternate Research at Mirae Asset Sharekhan, and welcome to this week's Market Pulse, where we break down the key technicals and derivative developments in the market. Stay tuned till the end to know which healthcare and IT powerhouses are flashing strong bullish setups and showing massive price action strength on the charts of this week. On the weekly time frame, Nifty has been consolidating within a broad range over the past 4 weeks. It has formed 4 consecutive doji candles coupled with repeated rejections near both its 20 weekly and the 40 weekly exponential moving average. This clearly highlights a state of indecisiveness at the current levels. Shifting to a short-term perspective, the daily chart above shows Nifty trading with a defined range, finding solid support at 23,800 and facing resistance at 24,300. The chart indicates that the index has taken support multiple times from its moving averages. These repeated supports on the daily charts, along with the repeated rejections on the weekly chart, suggest a sideways trend in the near term. Going forward, a decisive breakout above 24,300 could extend the upward momentum toward 24,600 and 24,750 levels. On the downside, a breakdown below 23,800 may trigger profit booking, potentially dragging the index towards 23,600 and 23,400. These lower levels perfectly coincide with the 61.8% and 78.6% Fibonacci retracement levels on the recent rally from the swing low of 23,070. Digging into the technical and derivative data on the daily chart, Nifty is managing to trade above its key short-term moving averages, 20 EMA placed at 24,030 and 40-day EMA placed at 23,946. The put-call ratio is sitting at 0.85. Looking closely at the open interest, distribution derivative writers have clearly drawn lines in the sand. Highest call writing is seen at 24,100 strike, and highest put writer are visible at 23,800 put strike. On the sector perspective, that is on the sectorial front, selective themes are showing strong relative strength. The Nifty Healthcare Index is showing significant strength, with BIOCON and SUNPHARMA looking structurally bullish on the charts. Simultaneously, the Nifty IT sector is also displaying notable strength, with heavyweights like TCS and Tech Mahindra displaying positive price action and steady buying interest. To summarize, on the weekly chart, Nifty is stuck in a 4-week range with 4 consecutive doji candles and repeated rejections at the 20-week and the 40-week EMAs. On the daily chart, a sideways range-bound structure between 23,800 and 24,300 with multiple cushion taken at the daily moving averages. Watch for a breakout above 24,300 to target 24,600 and 24,750. Conversely, a slide below 23,800 opens up door for profit booking towards the Fibonacci support levels of 23,600 and 23,400. Top sectorial picks, healthcare and IT remains the preferred pocket this week, backed by positive setup in BIOCON, SUNPHARMA, TCS and Tech Mahindra. That's all for this week's Market Pulse. Will the heavy call writers at the 24,100 strike keep a tight lid on the index, or will the multiple moving averages support trigger a breakout past 24,300? Share your thoughts in the comments box below. To access our videos and research reports in real time, join our WhatsApp channel today. The link is in the description. Explore research calls and detailed reports across equities, FNO, commodities, ETFs, and more. Visit research.sharekhan.com to kickstart your wealth creation journey backed by our research experts. Thank you for watching, trade wisely, and stay tuned for more updates from Mirae Asset Sharekhan.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.